Hi, Jonathan York by Financial Partners, looking at investment markets. US markets are really sort of just treading water, waiting for the Fed's decision. Now, while most expect the Fed to leave rates unchanged, it would just be interesting to see what commentary comes out with it. Because certainly rates are nudging up in the US. 10-year is close on 4.36, and the 2-year is now well above 5% at 5.11. And that's really been driven by expectations that maybe inflation might be a little bit more sticky than first anticipated, and mainly as a result of oil. Oil is now well above $90 a barrel. But inflation is maybe a little bit more sticky than first anticipated, and really as a result of oil. Latest CPI data, that came in at 3.7 versus 3.2 last month, but still well off its peak of 9.1. Now, interesting, the ARM IPO was really well supported, around 10 times oversubscribed, and certainly saw a pretty major boost on its first day of trading. That did give the market a little bit of a boost, but I say, really just a little bit of nervousness as, oil continues to trade higher. Although the US consumer is still pretty resilient out there, retail sales, latest data for that was plus 0.6 versus expected around plus 0.1. Also, as well, a bit of clarification on the Apple issue with the sort of, a little bit of a dispute with China. Apparently, Chinese officials have come out and said they haven't banned government officials from using iPhones. And also, as well, the latest Chinese data coming out of retail sales was a little bit stronger at 4.6%, was expected to be around sort of 3%. So potentially with the latest sort of stimulus packages that are coming through from China, just sort of little bits here and there, maybe that is starting to see a little bit of improvement in the Chinese economy. But obviously still quite a long way to go. Also, as well, obviously the Russia-Ukraine war is still sort of rumbling on, and at the United Nations, the sort of annual sort of get-together there, President Biden's been pretty strong language in condemning Russia's actions. But it's just really up to the rest of the countries actually to sort of stand up and back him. Really, predominantly that's going to be sort of India and China that really need to sort of get behind the eight ball and come out with some pretty strong language. But is that likely to happen? Probably not. Now, sort of stated, oil well above $90 a barrel, currently trading around $92, and that's a 9-month high. And obviously, as we head into the northern hemisphere winter, potentially demand will sort of increase, and potentially people are now starting to talk about $100 a barrel on oil again. Now, latest data out of the UK, GDP was a really pretty poor reading. Was down 0.5 versus expected around sort of plus 0.2. really being hampered by bad weather and the current sort of industrial disputes going on in the UK. So it will just be interesting to see if the Bank of England do increase rates against this backdrop. Now in the Eurozone, the ECB did follow through with its 0.25 rate increase, taking rates there to 4%. That's a 10th successive rate increase. Now the question is this peak of European rates? Potentially, because inflation is starting to fall there, although certainly with those higher energy prices, that will have a little bit of a sort of mitigating impact on the readings. Now in Australia, the jobs market is still pretty strong, coming out with around 64,000 jobs created in August. That was versus a forecast of around 23,000. And certainly migrations in Australia, still pretty strong. Currently running at around 400,000 for the year and expected to be 500,000 for 2024. Now obviously potentially that gives the economy a pretty major boost. But also as well comes with some certain issues, because obviously you've got to find housing out there. Potentially it's a little bit inflationary as well. But interesting, the latest NAB business survey was just slightly up around 2 points versus its previous reading. Now here in New Zealand, really sort of all about the election, now just around 3 weeks away. We had the first leaders debate last night, and potentially it was sort of, I suppose a little bit of a sort of tame affair really. Both sort of managed to get their points across, and certainly there doesn't appear to be a clear winner out there. But certainly the polls are still pointing to a pretty clear majority for National and ACT. The government facing increasing pressure, especially on crime. Latest sort of incidents over the last sort of couple of days, really pretty horrific. Well, potentially you might get a little bit of good news this week with the latest GDP data coming out, expected to be around sort of plus 0.4, plus 0.5, which technically takes New Zealand out of recession, but only looking at a sort of annual rate of around 1.2 for the next sort of 12 months. But on that little bit of good news out there, the latest dairy auctions showed a slight increase in prices and sort of volumes, after being really pretty poor over the last sort of 3 to 4 weeks. But just on that GDP data, it's sort of quite interesting. The government keeps on blaming the sort of slowdown in China, etc., for the sort of sluggish New Zealand economy. But China is still growing at around sort of 5%. New Zealand's going to grow at 1.2% for the next year. And certainly the New Zealand economy, really has been sort of buoyed along by sort of net migration data. That's currently running around at sort of plus 90,000 for the last 12 months. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.